The ISAG Association is comprised of 20 Geneva-based investment strategy specialists who meet each month to share their views on economic and financial issues and the bearing of these issues on their investment strategies. Joining me in the studio today to discuss the findings from their April meeting is ISAG Association President Mourtaza Asad-Syed, Vice President Yann Schorderet, and member John Plassard. Gentlemen, thank you very much for joining us today. Mourtaza, I'll come to you first. European indices have been in decline for some time now. Does the ISAG Association foresee a turnaround at some point soon?
The consensus on the European market is, I would say, twofold. Really concerned on European risk on the short term. It's really a concern, especially on Spain, and I think Yann will mention it. But there is also a consensus that there is value in the market. So the discussion and the consensus is not about really the timing, but really there is a lot of people considering that on a long-term view, on a strategic view, there is value in the market, and the consensus is slightly overweight on European equities. So it's really expecting that at those valuations, the market is going to re-rate the European stocks, which are a lot exposed to foreign growth. So there is domestic issues, there is domestic exposed sectors, but overall, most of the market has been damaged, regardless of the global scene. So at those levels, when you look at price to book, even excluding financial services or price earnings, you have a compelling value proposition for European stocks.
Yeah, and what are ISAG's forecasts on the euro-US dollar?
The economic conditions are much better in the US currently than the ones that we have for the Eurozone as a whole. Admittedly, the US economy lost a little bit of its momentum lately, but is still growing. By contrast, the Eurozone economy as a whole is now halfway into a recession, is likely to be in a recession in the coming month, and the most troubled countries actually are already in a recession. Unfortunately, the fiscal crisis going on will remain an issue in the near future, and the further austerity measures do not bode well for economic expansion. The second reason that is put forward by the consensus is about systemic risk. The consensus thinks that the dollar actually provides a good hedge against systemic risk. Recent history indeed has shown that it worked in the past. The dollar benefited, from a rise in systemic risk. It was the case, for instance, during the subprime crisis. So in other words, the dollar might compensate to some extent the loss that an investor might face in his portfolio in case of a surge in systemic risk, so a big loss in the financial markets. The political decision makers in Europe will have to do more to fight the crisis. If the situation gets worse, typically the European Central Bank will have to do more to buy more of these assets, these troubled assets. So these troubled government bonds that has been trading lower over the past weeks. So from that point of view, this might push the value of the euro lower because actually if we have additional liquidity injections from a monetary standpoint, this could weigh on the value of the euro.
Are new injections of liquidity in Europe and the US required to prevent the market from declining more?
The main catalyst behind our exposure to equity is, in fact, the realization that the credit channel is weakened in spite of the stimulus of the central banks. In fact, despite massive liquidity injection in Europe with the LTRO 1 and 2 and in the United States with QE 1 and 2, it seems that this and those operations was more to prevent the collapse of the banking sector. It's almost impossible for the economic momentum to rebound without any help of the lending standard behavior of the banks. So to answer your question, Natalie, I will say that of course it's very important to inject liquidity in the market. But I will say that without any focus on growth, it's only a short-term view. So, in fact, the ISAG is quite concerned about this question of liquidity.
And finally, gentlemen, aside from the Eurozone, which we're all aware of, what are the two other major risks to investors at present?
I would start by saying that this US growth cycle that is the key for many of the strategists is something very hard and harder to apprehend right now. Most of the consensus is quite positive on the cycle, but the risk is that really on a short-term basis, there is very little visibility and very high volatility of the American cycle, which is quite of a new setting from post-crisis situation. The second risk is on China. Many banks and many strategists have concern on what is happening on China. The view is the soft landing is happening, but the risks are clearly that the soft landing could go into a worsening situation.
And if I rebound on the Chinese side, we could say that 2011 was really the battle against inflation, trying to keep it under 4%. And we know that this year is more a battle for growth. So it means that the projection from the central bank, Chinese central bank, is 7.5%. So we hope that growth in China will stay at least over 8%. So this is one of the worries really on China. And the second risk, in fact, that we have.
But I think we also had a discussion about pretty much how to hedge those risks, because overall the position of portfolios is quite neutral or even slightly overweight on some risky assets, like hedge funds or equities. And there was a lot of discussion on gold.
Gold prices should actually continue or resume the upward trend. However, what is interesting to mention is that the upside potential has been revised downward with regard to the fact there is no strong catalyst at the time being, in the sense that the strong catalyst would have been obviously the announcement by the Federal Reserve of the United States to go ahead for a third round of quantitative easing. So it's not the thing that is on the card right now. It could happen later this year. However, at the present time, this case has been dismissed. So still constructive, however, this kind of downward revision concerning the upside potential.
Gentlemen, thank you very much.
Thank you.
Thank you.
The ISAG Association will be joining us once again in just 4 weeks' time to discuss the results from their May consensus. For now, though, goodbye.